Hello and
Hello and
welcome.
welcome.
So
So,
this is the second part.
second of this training series. So, as we have discussed in the last part regarding the statistical and mathematical parts of this one. So, 1 second, let me do. Okay. So, what is the why one should use? Let me put it in this way. Why one should use this thing? What benefit does this toolkit version Wykoffian toolkit has to offer? First being said, I talked about three laws of Wyckoff. First, demand and supply. Second, effort versus result. Third, cause and effect. So, whatever indicators which I have made, I try to focus on demand and supply. So, having said that, what is demand and supply in this particular tool and what it has to offer? First thing, I've made a manual of this toolkit. So if I do the setting of this one, once you go into the setting of it, this is a new feature, effort versus result added into it, but still it's in beta phase. So once it is like this is a beta version which everyone would be getting. Once I'm done with all the observations of effort versus result, then it will officially added into future versions. But I have added analysis dashboard into it. The analysis dashboard helps a trader to identify a current situation taking place in the market. For example, it is quite self-explanatory. This would be added into manual also. If there is a green candle with a green triangle, that means demand is greater. I'm talking about these candles. Green candle, green triangle. Demand is greater than supply. Same goes if there is a red candle with blue triangle, a red candle with blue triangle, a red candle with blue triangle. This means in this particular candle or bar or line chart, whatever you are using or using it on. So here the supply is greater than demand. So there is simple one thing. If demand is greater than supply, so what we can expect price appreciation, and if supply is greater than demand, we can expect or we can expect price depreciation. Means we can expect price fall and price rise. Simple. Third, if we are if this is printing a green candle with with blue triangle, sorry, because I don't conduct any session with a script in my hand. I try to be spontaneous, so please bear with me. So having said that, if you see any green triangle, let me pull up. If you see any green candle with this one. If you see if there is a green candle with blue triangle, That means there is an imbalance between demand and supply. So whenever there is this kind of things is happening, that means either we can see a trend change. Trend change could be like in this particular situation. I'm not going back. I just want you to concentrate on this part. We were coming up, then we have a pullback, and we started consolidating. So there are two outcomes of this one. Either there would be a correction taking place because the corresponding trend or the previous trend was up, or either this consolidation is going to end. So in both the ways, either there would be an end of immediate price behavior or price movement, you can say. So the immediate price movement at this particular point was consolidation. So that says the trend change means we would be coming out of this consolidation zone. And normally this kind of candle prints when there is a consolidation taking place, or because this identifies demand and supply imbalance. Same goes with when we see a red candle with green triangle. Here it suggests supply and demand imbalance. Here demand is coming first, then supply imbalance. Here supply and demand imbalance. So we'll find this example for this one. See, a red triangle, a red green triangle with red candle here. See, this is the area which had selling initiation, and as we are approaching in this particular area, we are seeing this formation, a red candle with green triangle. This means there is this imbalance between supply and demand, and in the same case as with green candle with blue triangle, there would be a trend change. That means the immediate trend was up. Here we are not having any consolidation. This immediate trend is going to change either ways. So if we go with this analogy, many times I have seen if this is a resistance level and we are approaching it, and this candle prints when we are near or in the zone. So either ways we will see a trend change. In this particular case, it is an uptrend, so the trend change would be a downtrend. Or either ways, price will knock into a sideways zone, or it will get into consolidation. And after the resolve of the consolidation, there would be a breakout test, and then price will continue upwards. Or either ways, there would be a consolidation, there would be a breakdown, test of the breakdown, and then price continuation toward the downside. So this trend change means there would be immediate cessation of whatever thing is happening in the past, or whatever the past immediate trend was. Now, here we have a hollow circle and orange and red triangle. This hollow circle corresponds to this hollow candle. for us, or for the trader who are, or for the people who are using this toolkit, hollow candles are the neutral candles. It doesn't add any value to our analysis. But having said that, they have some important role to play, because where they occur in any given market structure or any indicator, if you're applying like moving averages or any Bollinger Band or Ichimoku or whatever your liking is. So if there is an hollow candle with orange triangle above, it is like there is weak demand, or either ways there is no supply, and we can expect upward price flow. And same goes if there is a hollow candle and there is a red triangle underneath it. This signifies there is weak supply, or demand is weaker, and there would be a price flow towards the downside. Here supply is weaker, so we can expect upward price flow. Please remember this or in between. So either this one would happen or this one would happen. Or sometimes there are situations nothing happens. So you don't have to bother about that thing, because it is, you are into a probabilistic kind of a trading. You are not here, and I'm not here to understand market inside out. We want to catch best probability and best possible situations wherein a winning ratio, wherein our risk would be less and rewards would be greater compared to our risk. So having said that, these are the last two hollow candles, and then we have no demand and white candles. White candle represents, here we are not concerned with the triangles, we are concerned with the candle color. If there is white candle, that means there is no demand or no supply. So no demand, here context comes into play. If we are coming down and this white candle forms, that means this selling is finished and there is no supply. Here also no supply, here also no supply. And if we are going upwards, that means, and if it occurs when we are going up, that means there is no demand. Let me find a situation like here. There is no demand. So what does no demand and no supply means basically? Basically, these are the points wherein, or these are the price areas wherein a particular demand or particular supply which is pushing market either upwards or either downwards is coming to an end. That doesn't mean price will fall, there would be a tremendous and heavy trend change and price will fall 100, 200, 1,000, 500 points. But this is sure, either this will cause a temporary cessation of price movement to its previous trend, or either ways it will act as a temporary pause. So Normally, it has been seen this pause knocks the market to a sideways momentum or sideways direction before continuing either its upward trend or downtrend. So this is a kind of a testing taking place over here in the terminology of VSA or like normally David also and Gary also used to talk about this thing. If there is this is the area we are coming down and we are getting a no supply, there is a high probability that price might go higher, and this is the best place to initiate your buy trades or long trades. So I'll not come down to the trade setups now. Yellow color candle. This is my baby. This is based on my 15-16 years of experience. Only two things will happen when this thing will appear. Either there would be a trend change. Either price will continue its previous trend. Like for example over here, after the cessation of downtrend, we had a testing no supply, then price started its upward movement. Then we had this yellow candle or yellow bar if you're using bar. So two things will happen. Either you would see as we are going upwards after a conclusion of downward movement, price will come down or either price will continue. Whenever this happens, either of any one will happen. Like in this case, there was continuation of price upward movement. Here also, as we are coming down, there is a trend change, then continuation. Now, for many people, there is a different meaning of trend change. As we are using tape reading toolkit, when we are reading a tape means whatever orders are being executed. Because in Wyckoff, in the time of Wyckoff, he used to get tapes, ticker tapes, whatever orders used to be executed, he used to get those details, and based on that, he used to do his analysis. So, in the same manner, in those days, there was no time limitation or time thing while doing any analysis. There was no time constraint, but we are constrained with time. If we are using 1 minute candle or 1 minute time frame, or either if you are using a 1 monthly chart, there is some time limitation to it. So whatever data we are getting, that is restricted to this particular time. So whatever tape reading we are doing, that is only restricted to this 5 minute. So you cannot see or you cannot get a major trend change in 5 minutes. Though there are certain situations wherein you can see you will get major trend change taking places. But if there is a 15 or 10 minutes of duration going according to you, that means your analysis was right. So in this case, there was a continuous downtrend for like 15 minutes. This 5 minute showed us there would be a trend change or price continuation. There we had a pullback, a minor pullback of 5 minutes. Because why I'm talking about pullback? Because this is closing above the previous close, or previous high, or previous open high, low close, whatever you want to consider it. So this is a trend change in context with this particular downtrend. Then we had continuation. Then after that we had no supply and price continued upward journey. Same thing happened over here. We in the last 15 minutes we are getting downtrend, as well as we got demand which is greater than supply. But after that we had a trend change or price continuation kind of a candle, that is yellow, and immediately after that we can see weak supply. So if how one would analyze this situation, there are three contradictory things happening over here. Here you can say demand is greater than demand, like demand is supply is greater than demand, or demand is there is a demand supply imbalance taking place, and in this imbalance we are able to see there is a trend change kind of a candle, and then it is continued by weak supply. What does that mean? After this big sell off, please and try and understand, if I'm talking about 5-minute time frame chart, we are not, this tape reading toolkit is not restricted to any time frame. We are reading individual ticker or candles in context of the entire structure or entire context. So try, if you initially it will be a complicated thing for you, but if you use this analysis dashboard, it will be, this thing will make a lot of money for you, because this will, I will not say like it will increases your winners, but that's for sure it will reduce your losers, and it will help you in staying back in the trade and take well-informed decisions, whether the wind is in your favor or is it against you. So if this is an imbalance, demand supply imbalance, which is followed by a supply and then a trend change or a price continuation kind of thing, that suggests in coming uh, sessions we would see, like in this context, one session would be a 5-minute. In coming sessions of 5-minute, price to go down, and it happened. So this toolkit will help you in identifying winning situations in the market, as well as it will reduce your losing trades to a greater degree. Apart from this analysis dashboard, I have also included this one. This will help you in reading individual bars also, but I suggest you start with dashboard, because this will help you immensely in understanding what is happening with this particular session candle. If it is 5-minute, it is 1 hour, it is 4 hour a day, doesn't matter for us. So this is what dashboard has to offer. Now, for example, what happens if we use it with other indicators? Like I said earlier, or in the first session, there are many people who are using ICT, smart money concept, moving averages, RSI, MACD. And other indicators and other strategies with this one. So how you can use it in conjunction with this one? So Here I'll bring up my PDF which I've made and try to understand how and so how to use this thing. One second, let me stop the share and bring the PDF. First, it's my request to everyone, please read this PDF carefully. It will help. I'll start with the first slide. Tape introduces the key features of this toolkit. First thing, reading individual price candles or byte like bars like professional. Understand hidden and obvious demand and supply. Identify key turning points with the help of demand and supply story. Take confident trade entries based on which side has a greater power to pull either demand or supply. Trail your stop loss based on key structural price behavior in terms of demand and supply. Buy or long when a demand is greater than supply, or short or sell when supply is greater than demand by using my toolkit. This is the first thing. Now, before getting into what is the ideal situation for selling and buying, I'll start with what is ideal selling or buying situation. This is trade setup one. Trade setup one means if there is a cessation of either, like this is a selling situation, so I would talk that if there is cessation of demand and then we see price coming down with supply is greater than demand, and if we get no demand or a hollow candle which signifies with orange triangles which signifies weak demand, and as soon as price turns down, this is the ideal situation to initiate a sell trade or short trade to stop over here, and targets either 1:1, 1:2, 1:3, or my favorite, which I always tell my students to, like my master trader course students, to set the targets on the opposite support or resistance levels. So this is a sell continuation kind of a trade. Same thing happened over here. We had a pullback, an upthrust, and after upthrust, we have sell initiation taking place. This is not a pullback, but a weak price behavior. A weak price behavior because normally it won't happen. You would get a pullback. There would be hollow candles forming, and then there would be a sell continuation, candle printing over here. You can initiate your sell trade over here, place your stop loss above this candle. But whenever this kind of situation is, like if you're not getting any pullback, please listen to this carefully. If you are not getting any pullback, only there is weak price behavior, be very careful, because whenever you're initiating a sell trade, there is a probability that price might give you a pullback. before continuing his downward journey. So if this second thing is happening with weak price behavior, please use your other indicators or other confirmation tools with this situation. But if this thing happening, and this thing should happen either with an upthrust taking into consideration, or either resistance or support getting converted into resistance kind of a thing. So this adds more weightage to your trade, like for example, more probability of winning this particular trade. After this, trade setup 1 buys example. Here price demand initiation, then we have a pullback, and after that pullback, this demand continuation candle prints. You can initiate a buy over here and place your stop either here or either here. As far as myself is concerned, I always like to minimize my risk and let profit take care of itself. What I'm concerned about in my trading is only minimizing my losses. Because if I succeed in minimizing my losses, eventually my profit would be greater and much more greater than what I have risk against. So, but having said that, there has to be a structural point, because 80% of my trades or 80% of the time I'm relying on structure or structural points or my key structure and master structure indicator for initiating any buy trade. This is only for explanation purpose. Don't buy blindly in between. If you're using ICT concept, if you're using smart money, if you're using any indicators like moving averages, RSI, MACD, Bollinger Band, Ichimoku, or any supporting tools or strategy of your own, you can align this thing with it. If this forms any confluence with your strategy, go for the trade, because demand pullback, demand continuation. This will most of the cases, most of the time, it could result in more than 1:5. This is based on my observation. So having said that, this is trade setup 1. Now I'll come down to setup 2, which is not that much common. This is not idle trading situation, because this requires more kind of let's say subjectivity to it. For example, I'll start with this one. We have supply exhausted over here, and new fresh demand came into picture. Then we have a pullback, which resulted in no supply, weak supply. Then we have demand with widespread, and by observing it, we can say that supply demand is in control over here, as by the explanation you can see demand with price of expansion. And as the thing which is most important for me is, like, here I extended a resistance line, but as we are approaching over here, you can see there is weak selling taking place, a red bar with green triangle. These are the small things which I pay attention to, and which helps me a lot in identifying a great trading opportunity. So here price had stalled on previous resistance as we were approaching, and it increased. Like here you can say there is supplies in control, as we had seen two demand efforts to take this market upwards. And if we draw a small support forming on this particular time frame of 5 minutes, so you can see a small hidden spring, or you can say spring. I call it only spring. There is no hidden and obvious springs. Spring is a spring, and that too in an uptrend with strength in the background. And third thing to add to the story is like here, this spring is occurring on previous resistance, and which was engulfed by demand, and later on we had a no supply trending over here. Now, if you see this particular bar, it has eaten up all the efforts from the sellers to take this market down. And that is the reason we can see two tests. This one is no supply. This one is no supply, followed by the demand, which has eaten all the efforts of the supply. And after that, we are seeing demand supply imbalance. And this is the last effort to take this market down by the sellers, followed by the supply. And after this kind of bar, this is quite obvious. You will see this weak demand kind of bar. A neutral bar with green triangle, with orange triangle suggests there is weak demand. So if this is supply, why we are having we are getting a bar, this kind of widespread bar. Compared to this spread is wider with weak demand. That means there was hidden buying in the form of selling taking place over here. So this is a complex analogy to understand. But if you are a Wykoffian trader, if you are well versed with BSA, if you are well versed with Gary or David's work or Hank Prudence work, this is some kind of redistribution taking place on a resistance place, and which got converted to support to the spring and heavy volume test of the spring. And this bar is the bar where I would initiate a buy if I'm not into the trade at this particular point, like on no supply. This is the clear indication for me getting the trade after the spring, because it adds weightage to my understanding and it gives me high probability opportunity. So please watch it again, this video, especially the last ending 15 minutes or 10 minutes of this explanation. If anyone wants any detailed explanation of this bar by bar analysis, I'll go for that one also. Or we don't consider this one as I'm only talking about bar. This same analogy, same thing applies to candles also. There is only graphical representation of bar and candle. So hope you have enjoyed this video of this second training. I'll continue with another third session with the same script and continuation with another slide. Thanks for watching the video. If you have any doubt and comments and any questions, comment below or join the Telegram channel and you can ask me. And thanks for watching this video.